After days of suffering, or rather weeks of suffering, maybe months of suffering, the POL token or the Matic token is finally going up. Now the question is, what's fueling this rally? Does it still make sense to buy? How much more upside potential is there? In this video, we're going to look at relative valuation metrics. We're trying to figure out how Polygon Matic is standing relative to the competition. Now this is the situation today. We are at 52 cents roughly, and we are up 13% today. And this week we are up more than 38%. And this is the chart most people might be looking at. This is the Matic price in US dollars over the very long term. And it seems like there's some kind of a floor here. Have a look at this. It seems like we always turn around somewhere around the 30 cents mark. The first time we had been at this level, we went up by more than 800%. The second time we went up by almost 400%. And so far with this current bounce since the bottom, we are up roughly 80%. But does that mean that from here we've got another rally of say 150% almost, maybe even almost 200%? Now this is the simplistic approach how some retail investors look at things, right? You simply just draw random lines on charts and to pretend that those kind of lines mean anything. But I don't think it's the best approach. I think it's better to actually look at opportunity cost, to look at relative valuations. Now let's discuss the relative valuations in a second. I first want to share some statistics about this YouTube channel. I've published several videos on Matic on this channel before, and it seems like especially recently those kind of videos tend to outperform an average video. So the average video is here in gray, and the recent Matic video made pretty much double of what a typical video would do, and it still gets a lot of search interest. And so this is a potential hint that retail does have some interest in the token, right? It's not a completely dead token. It is a token that gets discussed. Now, with Bitcoin climbing from one height to the next and getting closer to the 100K, a lot of people are considering what are alternatives to Bitcoin, because for Bitcoin to do another 10x, it needs a lot of capital. It's probably not going to be the most levered play. So in order to benefit more from this current bull run, maybe something like Matic makes sense, right? Maybe there's some kind of inherent leverage in Matic. And so let's compare a Matic investment with a Bitcoin investment. The best way to do this, I believe, is with a relative valuation chart. So this is now Matic relative to Bitcoin. Again, this is a very long-term chart, and we are actually at an all-time low relative to Bitcoin. It's not a massive low, but still, we are still 11% below the lowest prices in 2021. Temporarily, we went down more than 30% versus that low 3 years ago. Now, it's important not to underestimate the kind of volatility here. We already know that Bitcoin can go down, say, by 70 or 80% in the bear market. That's already pretty risky. When we buy something like Matic, this is amplified. In other words, you can't put as much of your entire wealth in Matic compared to what you can put in, for example, into Bitcoin. Investments should be risk adjusted. And so initially, when Matic got its adoption and when it launched, it outperformed Bitcoin by more than 800%. But in the last 1.5 years, roughly, since February of last year, Matic did worse compared to Bitcoin by more than 90%. If you decided in February of 2023 to buy Matic over Bitcoin, you'd now have 90% less money. And so yes, Matic is going up by almost 40% this week. But in the grand scheme of things, relative to Bitcoin, it's really just a small blip in a marathon of suffering. Now, where does this all come from? It comes mainly from the change of tokenomics with the move from the Matic token to the POL token. So this is now the supply development of the POL token. It's growing over time. And that supply goes to the community treasury and it goes to validator incentives. When people bought the Matic token, right, there's a one-on-one conversion from Matic to POL. The expectation was that all token inflation is gone, that it's all finished in 2022. With the migration, that has changed, and that's why a lot of people are disappointed. Now, a little bit of token inflation might even be justified in that case if Polygon Matic was to outperform all the other chains right now. But this is unfortunately not what we are seeing. When we look at the total value locked development in the last month, we see that the newly hyped Sui chain is doing very well. We also see, as so often, that Solana is doing pretty well. But Matic in the last month only had a total value locked increase of 0.86%. It was the worst number across all of those chains. Now again, this wouldn't necessarily be that much of a problem if the main usage of Polygon Matic wasn't DeFi, right? Total value locked is a success metric of DeFi adoption, But have a look at the largest tokens in terms of liquidity on-chain on Polygon. BET is DeFi or GameFi. Liquid Staking Matic is DeFi. Go Game Token is GameFi. A lot of other wrapped assets that all get used in DeFi. It's a very much DeFi dominated chain. It's very different to what we see on Solana, for example. Have a look at Solana. It's all just meme coin trading, right? And this is what performed pretty well in the last months. Now, to be fair, measured in US dollars, the POL token or Matic might continue to go up because currently the crypto market is expanding very rapidly. What we've got over here is the stablecoin market cap over time. And we saw this contracting after Terra Luna imploded, after the Anchor protocol was bust, after UST depegged, then subsequently we saw the FTX collapse, and then we saw the turnaround starting in October of last year. And now we see money flowing into crypto again, right? Fiat deposits get held by various crypto custodies. And then we saw the turnaround again in October of last year. Now the crypto market is expanding again. Fiat currencies get deposited with various custodians that then issue the stablecoin equivalent on the blockchain. So a lot of money is flowing into crypto. This pushes up various prices. And of course, a rising tide lifts all boats. The boats do get lifted though at different speeds. Now, I'm not sure if this analogy still works, but still, the altcoin market as a whole actually currently is underperforming Bitcoin. So this is not necessarily just a Matic related problem. Yes, the tokenomics updates are Matic related, but when we just look at others, when we look at the others' dominance, so that measures how much of all of crypto's market cap is in the altcoins that are not in the top 10, which is, by the way, true for the Matic token. It's below the top 10. Then we're seeing how the significance of all of those altcoins is going down since beginning of the year by 27%. In the last 3 years, that went down by roughly 50%. And at the same time, the Bitcoin dominance is going up. So Bitcoin as a fraction of all of crypto increases. And Bitcoin dominance tends to turn around once we are at a level of roughly 70%. In other words, when Bitcoin dominance is crashing, that means the altcoins are doing better. And this is the point in time where Polygon Matic might also outperform. But currently we are not yet there. We are still at 60%. We still have 10 percentage points to go. And of course, we all know why Bitcoin is outperforming everything else, right? All the money from traditional finance is now flowing in. There's a lot of purchases through the Bitcoin ETF. And of course, there's no Matic ETF. If you want to buy Matic, you have to go through something like an OTC dealer or through a centralized exchange. Now, currently, the Bitcoin ETFs scoop up the supply at a rate of 6.6%. Now, this is an annualized number. We just look at the history in the last 14 days. We annualize this, then we get to that number. Currently, the Bitcoin ETFs hold 5.4% of the Bitcoin supply. So the supply will more than double within those Bitcoin ETFs if we continue at the current accumulation rate. And so when crypto is expanding like this, but the others' dominance is going down, where are all the gains? In the last month, we have seen a lot of gains in the pump.fun ecosystem. Now, in the last week, this turned around. We see how now the very risk on meme coins take a breather. And so if you don't like all of that volatility, right, if you don't like to get that much into risk on assets, you can simply just be very passive and short the relative valuation of various DeFi protocols. So for example, I bet on falling prices of this asset over here. It has very little volatility and it tends to underperform very consistently since beginning of this year, more than 60%. Now, I'm not sharing how to set up this position or what kind of position that is over here on YouTube. I share it though in premium. If you do want to get a bit more risk on, then there are of course still the altcoins that have very small market caps. So check that out. There are tokens that went up more than 700% in the last week, and those are still in the meme coin category, right? Those are still Solana meme coins. For example, over here, I made a video on Cerebro more than a week ago, and nobody was interested in that video. The price at the time when I published that video, it was 7.6 cents. Now we are at roughly 50 cents. And so I try to find those opportunities regularly on this channel, right? I try to figure out where is there still some growth? Where isn't the market cap already that large? Or where is the token inflation already that large where we see dumpage all the time? Where can we actually still get our multiple X returns? And so I make those videos regularly over here, so feel free to subscribe, potentially even hit the notification bell, because again, the YouTube algorithm isn't necessarily that favorable for tokens that aren't yet that well known. The question then arises, how was I able to spot a token like this when it was still at 7 cents? Here's the answer. The answer is I like to track wallets. I try to find out wallets and then I track them. I try to figure out what are other insiders doing, what are top traders doing, what are other influencers doing that potentially move prices. And have a look at this. This is an alert for Cerebro, how Kyle Chessy bought the token at 7 cents. He sold his SPX 6900, swapped it for Cerebro. SPX 6900, by the way, went down since then. And this is how the price developed, up by 500% roughly. And so here is that Kyle Chessy. He's got more than 130,000 subscribers. He tends to make a lot of bets, and some of those bets don't play out, but the ones that do, they tend to make multiple X returns. And so here we go. Those are the wallets that we found by Kyle Chessy. We've got 12 of his wallets that we actively monitor. And we don't just track Kyle Chessy, we also track Crypto Banter, for example, right? A channel with more than 1 million subscribers. When they talk about the token, of course, a token goes up afterwards. We've got 33 of Crypto Banter's wallets. Again, we've got more than 400 wallets that we are tracking. Here's another channel that we track. This is Alex Becker, 1.5 million subscribers. And again, here are his wallets, 12 in total. And so I really think this is the way to generate alpha in crypto, right? If we want to outperform others, we don't just draw random lines on charts. We don't just hope for the best. I think the best is to copy the people that already did very good trades in the past. It's not necessarily trying to reinvent the wheel. And so that's why I made a dedicated tutorial course just on this topic. How can we find various influencer wallets? How can we then track them? And how can we finally also interpret the signals that we get from the tracking? Again, it's all part of the premium membership of this channel. The link is down below, thebitcoinstrader.com. It's not just about wallet tracking. It's also about backtesting. It's also about on-chain analytics. It's also about relative valuation charts and portfolio diversification, risk management, etc. There's more than 100 tutorial videos in total. And so once we've got a wallet signal, we of course also have to discuss when should we buy, when should we sell. We have to compare our on-chain analytics, etc. That's why we've got dedicated chats on the individual altcoins as well. So feel free to check it out. It's currently $125 per month. There's also a 1-week money back guarantee. So in case you don't like premium, in case you don't make money, just message me within the first week and I will refund you 100%. There's really zero risk for you. So can the Matic US dollar price go up? Yes, of course it can, but I don't necessarily think that relative to Bitcoin or relative to the small cap altcoins, the risk to reward is much better. I think there are better investment opportunities out there. If you got some value out of this video, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in premium. Cheers.